I'm your host, John Pugliano, also the founder, money manager at investablewealth.com. Happy New Year's. Happy April Fool's Day, which is one of the favorite holidays we celebrate around here in Wealthsteading. We didn't get to have our unconference this year, which we rarely do, which is why they're unconferences. And so we're coming to you live via YouTube. We get a lot of requests to do this. I've never done it before, and you can see why. There's always technical difficulties. We're getting on here a few minutes late. Hopefully you found the new link. We had a problem getting linked up and switching devices. And in any case, here we are. Not to face this alone. My co-pilot today is my son, Joe. Say hi, Joe.
Hello.
And we got some things to cover for you. We'll see if we get any questions. Again, we had difficulties of not using the right link. So we'll see if anybody finds us. I put a comment over there. If you are listening live, you could go over to the previous page and make sure anybody over there knows to come here. Hey, in any case, what's going on? The market just closed, and the last closing numbers I looked at looked just fine. I think the S&P 500 was up some 75 basis points. My portfolio is doing extremely well. From day to day over the last 4 weeks with the Iran situation, the market, as my portfolio can go down significantly, it can bounce back up the next day. That's why I've tried to keep a very cynically optimistic attitude, I guess, as I always have, and to just remind you, and this is a note that I put out to my clients today for a monthly review, but I mentioned to them that the biggest part of the crisis right now, the biggest opportunity the biggest problem with getting out of the market or fearing that there's going to be a big sell-off or a big downturn in the market, yeah, that's a short-term fear. The bigger problem, though, the more critical aspect is if you don't get back in, or if you wait too long to get back in, then you miss all the long-term opportunity. And again, today the numbers I was looking at, individual specific positions can be up or down 6, 7, 10%, and you miss that just trying to time the market on a minute by minute or day to day process. Overall timing the market, I'm all for that. Listen, if I thought, that there's a train wreck coming, I'm going to get off the railroad tracks. When it came to this whole Iran situation, it hasn't been a concern for me. We'll get to that in a second. Joe, is anybody following us over here so far? Has anybody found us?
We got a few people watching.
We got a few people. So some of you know that there's a problem and you're here now. Great. You can submit any questions you want to. Also wanted to mention that we had a comment previously from, what's his name, Bray?
Bray.
And I want to give a shout out to Bray. I believe, if my memory serves me correctly, he's from New Zealand. He had mentioned, he had some questions about things I'd said about debt, but he followed that up by saying something very impressive, and that's why I want to give him a shout out. And this is a shout out to all you unrecognized wealth setters. But Bray said that 7 years ago, I think he said he started listening to the podcast, and he took what I said to heart. I'd mentioned that, you're a real investor when you have a year's of income or a year of expenses saved up. Okay, not like an emergency fund, but just saved up as your savings. That's when you really become an investor, and you become financially independent when you get like 10 years of income in your investment portfolio. So I think Bray said he started 7 years ago, or he heard that 7 years ago, maybe. He's been working towards that, and he currently has, was it 4 years, Joe?
Yep.
4 years of income saved up in his investment portfolio. And so, listen, he's in New Zealand. You don't have to be on the other side of the world to take that advice and do it. You can be in Cleveland, and you can make that same thing happen. Also, shout out to him. He's a Mike Rowe kind of guy. I believe he said he's a stonemason. So he's a blue collar guy that works with his hands. Good for him. I know cardiologists that are wealthy. I know carpenters that are wealthy, right? I also know cardiologists and carpenters that are broke. It all depends on the lifestyle that you live, and it begins with learning how to earn and save. Okay, so shout out to him. And then we did have another question And it was probably more of an unhappy comment about the world situation. Joe, what did he say?
Okay, it says, can you tell me what you think about this? Trump claimed a unilateral victory over Iran, telling their allies to get the oil themselves if they really want it, implying that Iran will continue to hold the strait, effectively ending the globalization era.
Yeah, and that's really the point. I think he's discouraged in that, and this is what I've been trying to get across since I think at least the pandemic, if not before. We're in a shifting geopolitical situation right now. The Well, you hear about people talking about the world order, the way things were post World War II for the last 80 years. That's been over for a long time now. It should have been over even longer. It should have ended in 1991 when they had the implosion of the Soviet Union. We should have restructured then. We didn't, as always. We kicked I say we, the people that run things, they kick the can down the road. They wait for a crisis. One of the major crises that came along was COVID, which shocked a lot of people into finally realizing that we have a hollowed out manufacturing base here in the US. We have farmed out all of our, commodity, quote, commodity products, things like generic pharmaceuticals or steel production, things like that that people don't think are important. The elite don't think are important, but they're very important. They're important to the economy. They're critically important to national security. So COVID was a wake up call to a lot of that. But if you go back farther than that, you can see in the national security briefings that the the people at the National Security Agency, anyways, were aware that there has been a problem. There's been this major shift in geopolitical situation, and yeah, that global order is over. Um, what Trump says, and sometimes I joke around, I call him the Orange Man or Orange Tariff Man. Listen, I love Trump as much as I love any other politician. So don't get me wrong there. And hey, if he wants to invite me to the White House, I'll be happy to check out the new ballroom. Uh, but as far as Trump, listen, he says whatever he wants to say, and he's going to continue saying that. He is the consummate politician. He's just better at it than all the others. He can lie with impunity, and they all do it, right? It's not just Trump. They do it also not necessarily just to be dishonest, but as a tactic. And like a magician, they're telling you, look at my right hand, look at what's going on my right hand, and meanwhile, their left hand is off stage doing the trick. And we talk about regime change. We talk about going into Venezuela for um, cartel drug reasons. These are all just facades. These are talking points. The bottom line that I believe that we went into Iran is, again, this is something that should have been done 45 years ago, but you know why we didn't? Because we couldn't. That's also a key point in why I'm not worried about what's going on in the global situation. I don't think it's a train wreck about to happen uh, for the US, anyways, for the US economy, for the US stock market. And I say that because I think all of these events that are happening to realign the geopolitical situation are actually making it stronger for the United States. If I can find my note here I wrote to my clients today, I'll read you an excerpt from this. Maybe I won't. No, I won't, because I don't have it. Let me. I can't. I can't talk and multitask. So actually, I'm not going to read it to you because I can't bring it up on my thing. Do you have it on yours? See, this is why Joe is uh, is in my business. um, so today, in a note to my clients, and I do tend to take a more direct and unvarnished opinions with my clients that I tell them than maybe some things you may hear me say publicly in the podcast because they get me unvarnished. But I mentioned here, and I'm going to just read to you to put things in perspective. As I write this, the media is breathlessly awaiting the amphibious assault from Marines aboard the USS Tripoli. Yet the S&P 500 is only down 5.6% from its 52-week high. So to me, that's hardly a sell-off if we're really headed to World War III. Okay, point number one. Um, Point number two: the S&P is probably not down that much anymore after how much it was up today. Back to the letter. Then it says, while at the same time, safe haven assets have fared much worse. Gold is down over 14%, silver down 38, and those numbers have improved just from a week ago. Then I go on to mention, and Joe again saved me on this one. He pointed out on the last podcast episode I had mentioned about gold and silver being down. I forgot to mention bonds. Joe pointed that out to me that bonds have been performing horribly. So bonds right now are really performing much worse than the overall market. If you look at TLT, the 20-year Treasury fund, it's down 8% from its 52-week high. And what I see as more telling than that, zooming out and looking at the long term, is not only are bonds down during this crisis period, but over the last 5 years, 20-year Treasury is down in value 36%. Okay, so for all the people that think bonds are safe, that's just a Wall Street myth. They're not safe. Okay, so I go on to say the big winner of the Iran conflict is the US dollar, up 2% since the bombing started. Okay, then I go on to say Iran is just the latest battle in the new Cold War, which is an economic war. And it's the geopolitical instability that favors the US. Step back from the present Iranian fog of battle that we're in and look at the consequences that have occurred over the last 4 years with the Ukrainian conflict. Okay, now think about this. Estimates are that the EU will purchase $250 billion a year in energy resources from the US as a result of the Ukraine crisis, Ukraine invasion. US crude oil exports to the EU have doubled since 2020, now making up 15% of the market. Liquefied natural gas is up nearly 30% and is 60% of overall EU imports. Specifically to countries like Germany, it's maybe closer to 90% of what they're bringing in liquefied natural gas is from the US. Now, all of these statistics are from before the Qatar facility, the world's largest LNG facility, export hub in Qatar, was severely damaged from Iranian bombing. So the numbers I just gave you were from before that, and yet, the U.S. is dominating in energy sales as a result of the Ukraine crisis. As far as arms sales, the United States now has 42% of the global arms industry business, and that's a record over 330 billion a year in sales. And let's see, obviously a bulk of that's going to Europe now. There were some other studies that people conducted. I won't get into all that, but something about basically there's 300,000 US jobs and 60 billion a year that are directly related to the conflict with the war in Ukraine. Okay, so look at Iran in that context. This is just another one of those events that, again, remember, 4 years ago, people were scared to death that this was the first major land battle in Europe since World War II. It was the largest conventional, invasion since World War II. All these parallels made, people thinking it was going to be World War III, and yet it's been fantastic for the U.S. economy. I think the Iranian situation is going to be much the same way. I end that newsletter by mentioning old podcast episode. By the way, if you haven't ever listened to the book War is a Racket, because that's what I mentioned here. As retired Marine Corps Major General Smedley Butler said in 1935, war is a racket. You can check out podcast episode 209, I think it was, where I first did that on a Veterans Day tribute. But I finish up in terms of war being a racket saying Ukraine reminded the EU how much they depended on US support of NATO. And Iran is going to remind the world, and specifically Asia, how much they depend on the US Navy to ensure freedom of navigation. Okay, and that's really the bottom line when it comes to what's going on with global trade and globalization and all these other things, the United States is making the point that you need our nuclear arsenal, you need our Navy to patrol the seas, and without it, there's going to be hell to pay. I'm not saying whether that's good or bad. I'm not making value judgments. I'm just like a weatherman reporting the weather to you, right? That's the way I read it. I want to be invested in this. Again, I'm very happy with the performance of my portfolio over these last 3 weeks. Yes, it's down. Could I have saved some money by getting out? I mean, the thing about thing about this is we're 4 weeks into this war. The initial buildup was 3 weeks, right? It was all over the news. It was all over the media. It was telegraphed. Um, Anybody that wanted to could have easily gotten out before the bombing had they chosen to, because everybody knew it was going to take place. Just as those Marines are sitting, um, in the Triple E right now, and the USS Boxer's on its way over. I think it's another 4 or 5 days till it gets there. Hey, there could perfectly well be an invasion of some of the smaller islands over the weekend. And in fact, this is holiday weekend. The markets are closed on Friday for Good Friday. So, right, the invasion could start tomorrow once the market closes. That would be that would give the Trump administration roughly, let's see, we got Thursday night, Friday night, Saturday night, Sunday night, 4 full days before the markets ever open again on Monday's trading after the long weekend. Could it happen? Sure. Could that be the bottom of the market? I have no idea. Short term, I don't know what's going to happen. And that's the point. I didn't get out 7 weeks ago, not because I didn't see the war coming. It's just that I didn't see when it was easy to get back in. Because look at the VIX. I think there's been 3 days in the last 4 weeks where the VIX has maybe been at or right at 30. It's at points it shoots up beyond 30, which is usually a great buying point. It can hit 60 in a major panic. We're nowhere near those numbers. Um, the market's officially been in a correction, but how do you call this bottom, right? I would rather just be in it and be there to take advantage. And of course, any residual or new cash adding to it, as a number of my clients did. And I know a number of you listeners have been putting money into this market because you've told me about it. I've talked a long time. No surprise there. Joe, are there any questions for me?
Yeah, you just got one from Spider Bites. It says, "High level podcasts. Listened to all 500 plus episodes. Question: It seems you take a macro view first to determine trends, then work your way down to pick stocks/ETFs that work into your trend ideas. What are your indicators you use all the time to determine um, your macro view of trends? You've mentioned copper a lot for a pulse of industry. What other indicators to determine risk on or off?"
Yeah, good question, and a very complicated one that I can't totally answer now. Um, if you remember in the early days of the podcast, I used to talk about some indicators I looked at every day, and I used to say something like there are like 5 indicators. Used to say from a macro basis. I look at where the S&P 500 closed. I look at the price of gold. I look at interest rates. There were a number of things. I don't say those anymore because pretty much since then, going back 12 years ago, since then, almost all trading mechanisms where you're looking at whether you're looking at E-Trade or Charles Schwab or Yahoo Finance or Google Finance, when you bring up that initial um, market page, all those indicators are pretty much on that first page. So I really don't dwell on those anymore. I will mention that I don't really look at the macro as much as people think I do, or at least not in the early stages. Macro is a big buzzword that everybody loves to use in the last, I don't know, probably 5 or more years. Sure, I look at the macro events, but really where I start is with fundamentals. And this goes back to my old school investing. I've been investing for over 40 years, long before uh, that term macro was a big concept. And the reason I start with fundamentals is because I'm only investing in this sphere of stocks, right? As you know me, I don't invest in futures. I don't do commodities. I don't do any of those things unless I can do them under the guise of the stock market. So yes, I will invest in real estate through REITs or I'll invest in commodities by buying like a GLD ETF, but I don't go outside basically the New York Stock Exchange type thing, right? That's my world. And I choose that because and I'm digressing here, but I learned a long, long time ago that the best way for me to have success is to focus on my sphere of influence. This little crystal ball here. Shout out to a tactical redneck. I used to always say I never had a crystal, or I didn't have a crystal ball, couldn't predict the future. He got me one, so I have a crystal ball now. I still can't predict the future, but that little ball reminds me that's my sphere of influence, right? I can only control or influence the small little things in the world. And so by focusing on the things I can control, that's how I've built my wealth and my personal success, right? Controlling how much I earn, controlling how much I save, controlling what my expenditures are, controlling who my friends and family are, my career path, right? Those are all things I can control. When it comes to the stock market, I can't control macro issues, but I know that I'm only going to invest in, say, 7,000 investable equities that are in the world of, say, the New York Stock Exchange. So I start there. So I start with fundamentals and I throw things out. I throw out all the things I'm not going to invest in that aren't profitable or that I think are pump and dumps or that I think are just really sketchy. And there's plenty of those. So I throw those out. I start with fundamentals. Is the company making money? Does it seem to have good management? Does it seem like it has a business plan that's going to apply to the future? I start there. Then I zoom out and I look at the trends. And I don't only look at the big geopolitical things, but I'm looking at technology, right? And that's always the driver of everything. Whether you're talking about the railroads, the discovery of electricity, shoot, the discovery of fire, right? Or bronze or iron, the Iron Age. Every era has a technology associated to it where wealth is made. And so I'm gonna I'm gonna look at what's going on with technology, and then I'm gonna look at that in terms of the broader geopolitical issues, and some of those I take with a grain of salt. If you look at an investor sentiment survey, something like the American Institute of Individual Investors, you'll see that throughout their history, I think the majority of people are always either neutral or negative on the next 6 months. It's something like an average of 62%. 63% of the people surveyed are always thinking that 6 months in the future, the market's either going to be flat or be negative. Okay. They'll pull up a chart of the S&P 500 and you're hard pressed to find, over the last 80 years, any 6 month period where the market goes flat or down, right? The market over time goes up. On average, it's something like 60 basis points a month, it goes up. But you have the majority of the people, 62% of the people, thinking that's not going to happen when you can look at a chart and see that it's been that way for the last 80 years or more. People just get consumed with negativity. And where I want to kind of go with that on the geopolitical basis is that those people aren't always the same people, right? The people that are 34% optimistic today happen to be the red team because their guy's in office, right? They like the orange tax man, orange tariff man. The A good share of that 60% of people that are negative right now are in the blue team. They hate Trump. Okay, that's fine. But you know what? You just go back 3 years ago or a couple years ago, and it was totally reversed. I would talk to red team people, and they were negative on the economy because they thought, slow Joe Biden was going to ruin everything. And all the people that were positive were on the blue team. I try not approach it from that way. Yeah, sure, I have political views, but I'm in this to make money. And as I look at it over the long term, a lot of those bigger political issues that people worry about just are never the case. Technology advances things. Right now, we are in a major convergence of three events: the technology being not only artificial intelligence, but also robotics and automation. I wrote a book on that. It's like almost 10 years ago now. It's hard to believe. But that trend is coming to fruition. And it's really back to the internet of everything. We're really talking about everything being remotely controlled. And it's going to create a lot of efficiency, a lot of productivity. It's going to make a lot of people wealthy. The other major trend is what we talked about with the shift in geopolitical issues. It should have happened in 1991. It's taking till now to happen. But we didn't attack Iran in 1978 when they took over the American embassy. Why? Because we couldn't. We the United States, depended on oil from that region. Well, you fast forward today, we, the United States, no longer depend on that. Sure, other countries do, India does, China does, but the US doesn't. That's why we attacked Iran now. Whether it has to do with regime change or not, it is irrelevant. The United States shows its muscle when and how it, shows its muscle when and how it can. And if it can't, it doesn't. Okay, but we are in that political shift. And then the final one is demographics. We're in a global state of most developed and emerging nations are declining birth rates. Overall, the globe is still slightly increasing, but nowhere near the rates that we've had for the last 80 years. That reduction in the birth of children is going to have a major global economic impact. It already has over the last 10 or 15 years. I think the United States is better prepared than anyone to handle that issue because to the extent we don't have children, we'll bring them in from somewhere else. We'll do a brain drain from the rest of the world, whether it's labor or whether it's brain power we need, we can bring it in. And as far as that's the demographic issue, the technological issue, and uh, the technological issue and the geopolitical issue all favor the U.S. Every one of them. So I remain highly optimistic.
Okay, we got another one here. It says, I've listened to you forever, but don't think I've ever heard you get into gold despite this big run up the last few years. What would it take for you to become interested in gold or mining stocks? Also, patiently waiting for when you get into Bitcoin. It's looking pretty undervalued.
Brother, keep waiting. I'm not opposed to any of those things. My friend Jack Spirko, every time I see him, he reminds me of when I passed up the opportunity to buy Bitcoin at $230. Yeah, $230. I had November of 2015. I had told him I was going to buy some Bitcoin. I didn't at the time, and that would have made me. Hey, had I bought Bitcoin in November of 2015, I'd be a multimillionaire today. Well, okay, I missed that opportunity. Right, I'm still a multimillionaire. Right, you make it up somewhere else. Um, I'm not opposed to buying Bitcoin if it dropped below its long-term 4-year moving average, which it's been flirting with. I may be more interested in it. I would prefer to buy it on a really crisis bad winter, like we saw with FTX when that went bust. And um, as 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 genius as Michael Saylor is, I think he's getting himself way over his skis in debt with buying Bitcoin. I think that could spur a crisis if that happened and the price got low enough. I may buy it. Over the years, again, I've been investing for over 40 years. I bought GLD. The only physical gold I've ever owned is my wedding ring. So I've never bought physical gold. I have dabbled in things like GLD or SVL, whatever the silver ETF is. What I learned over the years is I haven't been able to trade that effectively to make money. I would much rather buy downstream or upstream of that. You mentioned the miners. I have on occasion bought miners. I had intended to buy gold miners about 18 months ago, and I missed my opportunity there. I did it. I did those shift and buy uranium miners, which have been fantastic. So my again, when I talked about that sphere of influence, I focus on those 7,000 or so equities that I think are easily, highly liquid and able for me to trade in. And I would much rather own the miners or Cummings Diesel or Caterpillar or those type things in the supply chain than specifically own um, the gold or silver itself. I think over the long run they make money, and again, I can determine fundamentals on those. Right, I can pull up Newmont Mining or Cameco or some mining company. I currently own two miners they have gold and silver assets, but primarily copper. Southern Copper and Freeport McMoran. I can pull them up. I can look at their price to earnings ratio. I can look at their future earnings. I can look at um, their management decisions and what their cash flow is and what their gross and bottom line profits are. I can come up with all those things and decide, yeah, I want to own Freeport McMoran versus somebody else. With gold, there's none of those numbers there. There's nothing for me to evaluate other than where I think, right, where I think the market's going to go. So I choose to invest in individual stocks.
Take a break from the stock questions for a second and tell us about this light that you have here.
Oh yeah. So down below, you probably see it in the video. There's it's a railroad lantern. If you've heard me talk, especially in the early days of the podcast, I used to talk quite a bit about my grandfathers. I have since become a grandfather many times over now, so I don't talk about my grandfathers as much anymore as now I am one. But my grandfathers were a big influence on me. I have a couple memorabilias from their lives. This one came from um, my paternal grandfather. He was a railroader. I did an episode on him many, many years ago. If I need to rebrand that because it's an excellent episode. It talks about how someone with uh, you know big hurdles in life can still succeed. He was a prisoner of war in World War One, nearly starved to death in a German prison war camp. Um, Came to America, got a job on the railroad, his best job of his life. Anyways, that was his lantern from the railroad. It's the actual one, I believe. I believe it's like circa 1920 is that era of it. I've just got a light bulb in it, but it is the real official lantern, as well as some amazing books from my library. You got some of you guys may recognize those, and my crystal ball.
Okay, we have a follow-up on the trends slash indicators question. So you don't really look at indicators anymore because you have your long-term view in place. So the long-term trends aren't changing anytime soon, and you pick your stocks based on getting a good deal for companies or sectors you like.
Well, I'm looking at the indicators, right? But I'm just looking at them all the time, and there's so again, I don't kind of harp on them because everybody just can just pull up a screen of Google Finance, and you're going to see where gold's at today, where the 10-year Treasury is, where the U.S. dollar is compared to the Japanese yen or the Chinese yuan or whatever. So I mean, all those indicators are out there, and I'm 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 constantly looking at the world around me and trying to understand what makes sense. Right now, I look at the price of oil. We had a comment about Bitcoin. I look at the price of Bitcoin every day. I've never bought it. I look at the price of Bitcoin because it gives me an idea of where the risk assets are. So, yeah, I mean, I'm looking at Bitcoin. I'm seeing where it is in relationship to its prior trends. I'm looking at the price of oil. But I have different views on a lot of things. When I look at oil right now, and you see in the media, they're freaking out, right? Gasoline's over $4 a gallon, oil's over $100 a barrel. Yeah, that's a problem, but it's not a problem in the context of we just bombed a country that we couldn't bomb for the last 40 years because we needed their oil. When Ukraine got invaded, which disrupted oil, but nowhere near to the degree of what the Straits of Hormuz are disrupting things. Oil spiked up to $120, $122 a barrel, I think in March of 2022. We're at maybe under $100 a barrel today. I don't remember where it's at today. So I'm looking at these things, and while other people are looking at them being fearful, I'm looking at them saying, hey, they're nowhere near where they should be. If this is, if we were really going to put boots on the ground, and again, I wouldn't be at all surprised if the Marines and the 82nd Airborne jump in over the Easter weekend. But that's not the same type invasion that we saw with Vietnam, uh, the original Desert Storm, or when we went back into Iran, or get back in Iraq, or when we went into Afghanistan. I mean, those were buildups. I was still in the military back in the days of the when Saddam Hussein invaded Kuwait, and it was 1990. That buildup of troops from and I remember this to the day. Joe and I, as I mentor Joe in my business, I try and give him the historical background that I have, and I'm old enough where I've lived the history, right? Haven't only just read it in the books, I've lived it. Saddam Hussein, if I remember right, invaded Kuwait on August 2nd of 1990. The reason I remember that is because I went on terminal leave from the military on August 1st. And I was concerned, and I was being told by other people that my terminal leave was going to get canceled. I was going to be pulled back in because this was not just something minor. The U.S. was going to put boots on the ground. We didn't do it until February or March of the next year, right? It was like a 6 month buildup of troops before we could go and invade a country like that. I just don't see that happening with Iran now, currently. Things could change, but there's just not enough boots on the ground. The 50 to 70,000 troops we have over there are enough for me to see prices come down in the market and for me to see it as a buying opportunity. So, so I'm looking at all these things and I'm just looking at them from my different perspective of how I think the world works. It's very cynical. It's very real politique. And my kids have inherited it. This is a side note story. We'll really digress here. Joe, you just went out and made a major purchase last night,
I
right?
did. Yep.
What'd you buy?
I bought a truck.
An expensive truck, not a Wealthsteading truck, by the way. But um, why would you go out and buy a big, gigantic 6-seater diesel truck that you know diesel's probably $5 a gallon? Why would you go buy it?
More than that.
Why would you do that? Why would you do something stupid like buying that truck?
Everybody's afraid right now, and so there were a lot of deals.
Deals, right? You were able to work a deal.
Yep.
And you've been talking to a salesman all week. And we were in the office yesterday. Joe's like, this salesman just not giving me the deal I want. And I said to him, talk to somebody else, go to a different salesman. And what called and talked to a manager there?
Yep. Went right to the source.
And you had a deal by what time last night?
He had it within an hour.
Within an hour. And you went in at like 8 o'clock at night or something and did the deal.
Yep.
Okay. So the deals are out there on big vehicles right now because people are afraid of the price of oil. Well, remember the experts that are telling you that oil can go to $250 a barrel, they're telling you that now. Literally 8 weeks ago, they were telling you that we're in a global oil glut and that prices could drop down into the 40s. Okay, so these guys just make up numbers. They don't know. When you see a spike in oil like this, I don't panic. I use it as an opportunity to buy something. I usually buy stocks. Hey, my son, he buys diesel trucks.
Speaking of that, someone's asking for oil, where do you think the floor for WTI for the rest of the year will be? Do you think we will ever go back to $60?
We'll go back to 60. Yeah, again, my crystal ball here is foggy. Maybe you can't see it. There's a fog of war cast over it. I have no idea where oil is going to be tomorrow, the next day, 6 months, but there is a world glut of oil, and I'm pretty confident we will go below 60. And again, the experts were saying it was going to get in the $48 a barrel was some of the numbers people were quoting just 8-9 weeks ago. There's a lot of oil out there, and this is technology. If you heard me speak live, you've heard me talk about this before. When I go to a lot of events, one of my favorite things to point out that's happened over my lifetime with technology is with oil. Okay, it's not with the iPhone or all the amazing things that happen with robotics. It's pure oil. Through the first half of my adult life, all I ever heard about was we were going to have peak oil. We were going to run out of oil. United States oil production from 1971 or so, for decades, all the way up until about 2005, U.S. production of oil and fossil fuel products went down, down, down every year, year after year. It did that until technology shifted. Fracking, horizontal drilling, which is really no more than big data and robotics and automation and these remote control drill heads, that changed the landscape. United States, not only the basically self-sufficient, but we're one of the largest exporters now. We are the largest producer of petrochemicals. That happened over my lifetime when it wasn't supposed to happen. It happened because of technology. My cynical optimism about the future and why I have 13 grandkids, and a lot of people are like, why do you want to bring kids in the world? Listen, we got 13 grandkids. I look at my kids and I say, hey, get on the ball. I had six of my own. Let's go have some more. Um, I think this is a great time to be alive. I literally mean that. I think my grandkids are going to have the most fantastic future because of technology. The problems with healthcare, the problems with education, the problems with the government, they can all be solved with technology. Just like fracking and horizontal drilling solved the energy crisis, which seemed insurmountable. Um, that short term energy crisis, right, seemed insurmountable. Technology will solve these other problems, especially healthcare and education, easily can be solved with technology. We just need the crisis and the momentum to make it happen. I was going to digress on the technology thing with energy. Yeah, horizontal drilling and fracking gave us the next 50-year more runway. But technology again is going to solve the problem with nuclear energy. Nuclear energy has always been the solution. Um, we've chosen not to do it. You can go back to 1946 and read articles where people were saying that because of nuclear energy, electricity would be so cheap, we'd just give it away for free, right? We wouldn't even have to meter it. Well, that never happened, not because the potential wasn't there, just for whatever reason, policy decision makers didn't let it happen. And they were, I think, afraid of nuclear proliferation. They didn't want other countries to get nuclear bombs and weapons. They did anyways. You fast forward to 1972, 73, when we had stagflation and the Arab oil embargo in the U.S. And Nixon, when he started the EPA, and the EPA was begun by a Republican, not the blue team. It was started by a Republican. One of his reasons for scaling back things like the Clean Air Act and getting sulfur and getting all these emissions out of the air was because the plan was to have 1,000 nuclear reactors up and running by the year 2000. Right, that was over the next 25 years. They wanted to have 1,000 nuclear reactors. I think the U.S. got up to about 110, and then we stopped building them like 30 years ago. Well, we're back. Again, I'm invested in the up and down the supply chain, in uranium, in nuclear power plants, in the different industries that support those. I think long term, that is the solution. And again, I'm extremely optimistic about our energy needs. And had we built those 1,000 reactors in 1973, then I think you can be pretty sure that we would have never gone into Iran, Iraq, Afghanistan, or any of these Middle East wars. It just wouldn't have happened because we would have had the energy.
Okay, we got a question. John, do you do options? And then oil looks like it would be a good short. Maybe you
Yeah.
could talk about the backwardation that
Yeah.
you were
Joe and I
telling
were
me
just
about.
talking about options this week. I used to do, in fact, if you look on YouTube, you'll see some videos from 5, 6, 7 years ago, probably pre-COVID, where I did some options videos and specific things about why buy the dip when you can actually use options, right? You can buy a put, or excuse me, sell a put on something that you want to buy as a stock, and then if it gets down that low, it's the option expires and gets executed, and you have to take the stock, and so you're forced to buy something you were going to buy anyways, or and even if that would occur, you get to keep the dividend, right? Or the premium. You can sell a put on something you think is going down because you want to buy the dip. If it doesn't go down, you have the premium. If it does go down, you have the premium plus you bought the stock anyways. So that's some techniques I used to use. Um, I stopped for two reasons, and we were talking about somebody that we know did this with Tesla and lost a lot of they didn't lose money. They were forced to sell a huge Tesla position because the call that they sold, um, they didn't have the strike price high enough, and they ended up having to sell the position, and they didn't want to sell it, and it was a huge tax consequence. Something similar like happened to me with Disney and Walmart, probably around I think it was pre-pandemic, so probably around 2019. Those guys would get up to about 100, 110, $120, and then fall apart, and then get back up and then fall apart. And so I used to own them, and then I'd sell calls against them at 110, $120. Well, at one point, those guys broke through it when I didn't think they would. So I didn't buy the call back in time. They went on to go up another, I don't know, 30%. I missed the run up in it. I was forced to sell something that I really didn't want to sell. And so that's one reason. And then since the pandemic, and now we have daily options daily options expirations, and it's options have become a meme. We're just everybody's in them. The premiums I think have just gone down. I just don't think it's worth it anymore for me to spend my time trying to do that. And so I've focused on just investing in things that I want to hold for the long run and not worrying about something I want to sell in, you know, 2 or 3 weeks. But I do think it's a good time to short oil. Uh, that was just my opinion, not offering financial advice.
Is it too soon to be investing into nuclear energy companies? How many years until any new generation reactors can actually come online in America? Any companies in particular you like?
Yeah, so I do think it's too soon for the new stuff. So I'm not invested in the two biggies, and it escapes me their names. Uh, I'm much better doing this on a podcast when I can have a cheat sheet in front of me. Um, there are two well-known stocks out there of these small-scale nuclear reactors. I think the one's ticker symbol is SM SMR. Um, I can't think of their names. Anyways, I'm not invested in them. I think it is too early for that. They're too speculative. They could go to the moon. I just have no idea. I'm invested in fairly old school stuff that's been making money for a long time. Um, check out, I pronounce it Cameco. I'm not sure how it's spelled. I think it's CCE, I believe is the stock ticker. It's a Canadian uranium mining company. They've been mining uranium. They have a deal now where they've recently bought back the old Westinghouse intellectual property that was went out of business and basically stolen by the Chinese. We won't get into that, but Cameco is one I really like.
CCJ.
CCJ, CCJ, not CCE. CCJ, CCE is Constellation. I think Constellation Energy. Um, that's the company that almost is exclusively, they're a utility. They're unregulated, so they don't have to go through the government to raise their prices. They own the 3 Mile Island facility in Pennsylvania, and they've been in negotiations with all the big hyperscalers to produce nuclear energy for them. I also own, it hasn't done well lately, but it's still up immensely over the last couple years. LEU. LEU is the ticker symbol. The company name is Centrus Energy. I got to believe they're still up 250, 300%. At one point, just a few months ago, maybe 6 months ago, they were up like 800%. Um, they're an old school uranium refining company. They've got military contracts, they have government contracts. They're really benefiting since the war in Ukraine, because we've really, since the Cold War era, since Cold War is over, we've been relying on your refined uranium from Russia, basically decommissioned weapons. And with the whole Ukrainian issue, it hasn't stopped, but it's been slowed down. That's really benefited companies like Centrus. So I own them. So yeah, I'm not betting on any of the new technology. I'm investing in the here and now. And uh, other things we talked about. I mean, I think Cummings Diesel is a company that it's ancillary to that, right? You're not going to get that uranium out of the ground, or you're not going to get these power plants built, or um, data centers. None of this is going to happen without Cummings diesel engines. So look for the second and third derivatives, beyond what the headlines are.
Any guess on when new gen reactors might start being built out here?
I don't, I have some research from a good friend and a fan of the podcast, Dylan. I'll shout out to my friend Dylan. He's given me a bunch of research that I've been dragging my feet on doing a podcast on, just because all this Iran stuff is going on. And in prep coming up for this, I knew that uranium probably wasn't going to do super well, so I put that off. But I might do some other episodes on that. um, and rely on the information he's provided because I don't follow it that closely. I live not more than 150 miles from where one of these major reactors is going in. The one that Bill Gates is invested in up in it's in Wyoming. I'm looking at Joe if he remembers the name of the town. It's just north of Evanston, Wyoming, is where that facility is. So I keep ancillary track of it. I've got another son that's a scientist that deals with the nuclear laboratory up in Idaho. In fact, he might be up there this week. So I stay abreast of that stuff. But again, I'm in the here and now. I want to I want to make money on things that are making money today or have a really good like you know probability of making money tomorrow. Uh, if something's going to make money way out into the future, it's not that I won't invest in it. I mean, again, Centrus Energy, a lot of the reason the price spiked and went up 800% was because people were looking at what may happen in 5 years. Well, I didn't buy it for 5 years. I bought it for now. And then along the way, I don't plan on selling it as it goes up and down. I'm just riding it out. I think it's a trend for the long term. Uh, I'm going to tell you, I'm not smart enough to pick any of these things out at the exact bottoms, right, and sell at the exact top. And the way I look at the markets, no one else apparently is very smart enough to do it either, right? Except for the insiders. We won't talk about them. If you notice, you gold guys, go out and look at. I think if I remember right, gold spiked and hit its most recent high the day or the day before the invasion, this last bombing of Iran. So like February 26th, 27, I think is when gold spiked. And the bombing started, I think, on February 28th. So I think insiders, again, this is just taking a cynical view of the world. Insiders know what's going on. I think they've been running the price of gold up for a long time because, again, this just didn't happen overnight. We knew we were building up to this. I think a lot of smart money was invested in gold. And even before the bombs ever dropped, they knew the peak was in and they sold. And I would personally, I would short gold too at this point. But again, that's just my opinion. I'm not doing it. I don't short things, but
Someone's asking, shorting oil now. Please digress on why you think that way.
oh, I don't think we're putting boots on the ground. I don't think we're putting long-term boots on the ground in Iran. I think we're going to go create a big mess and leave. And when that's all over, the Straits of Hormuz have to open. Okay, step back a minute. Look at Iran. Look at Ukraine. How did we try and pressure Russia unsuccessfully? But how did we try and pressure Russia to not invade Ukraine or to pull back from Ukraine? Okay, we did that by trying to restrict how much oil they could sell or the price they could sell it at. Okay, because why? Because Russia. I think John McCain was the one that said, Russia's a country. It's a country with a gas station or something, or a gas station that's a country. Their biggest export is oil and petroleum products. They make all their money or much of their money from oil. So if we could restrict how much money they were making on oil, that would discourage them from invading or staying in Ukraine. Look at how that relates then to Iran. Iran is threatening the U.S. with closing the Straits of Hormuz, but the U.S. does not get nearly, I'll say, none of our oil. We may get a trickle of something to remember about our oil. We're producing close to 14 million barrels a day. You go back to 2005, I think we were producing under 7 million a day. We do export and sell a lot of that, even though we potentially could use it here. It's like our refineries can run on low grade oil, stuff that we can bring in from Canada, Mexico, Venezuela, other places. So we can buy that stuff cheap because it's thick, heavy, say high sulfur oil, and we can get it cheap. And our refineries like to run off of that, so we do that. We take our really high quality fracking oil, which almost is refined in its natural state, and we can sell that for a premium outside the U.S. So it's kind of like you have a cow and you're eating the ground meat because it's cheaper, and you're selling the prime rib. That's what we're doing with our oil. And So when Ukraine or when Iran closes the straits to hurt us, it's not really hurting us. It's hurting India. It's hurting China. That's why they're letting a few of those tankers in, because those are the big customers of Iran. And ultimately, though, the strait has to open because who does it hurt the most? It hurts Iran. Iran has to sell their oil to make money because they have even less of an export market and raw materials than Russia did. So they have to raise money by selling oil. The only way they sell it is by opening the straits. So to me, long term, when I look at that, unless it's mad, you remember the mutually assured destruction. The reason we never had a nuclear war was because both sides had nuclear weapons. We could all destroy each other. Unless Iran wants to destroy themselves first, um, they have to open the straits. If they open the straits, the price of oil eventually goes down. Does that happen next week, next month? I don't know. I just don't. Again, the U.S., we're not sending in invading forces. We're sending in the guys that kick in the doors, right? The 82nd Airborne, the amphibious units from the Marine Expeditionary Units. They're going in there to blow things up and break things, and then they're going to leave. They're not going to occupy for long. If they do, it'll be kidnap hostage situations. Maybe we take over some big oil hubs, but I don't think we have any intent of staying there for the next 18 years like we did Afghanistan. So I think the price of oil naturally comes down. And does it get to 40 like the experts were predicting? No, I don't think so. And again, I think that's part of this war. ExxonMobil doesn't want oil to go to $40 a barrel. Saudi Arabia doesn't want oil to go to $40 a barrel. The US doesn't want it to stay at 100. So it's likely to be below 80. I think probably below 60. The 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 Saudi states would like it to stay at 80 or more. US wants it or 60, below 60. So I think it'll be below 60.
Okay, we've had a lot of great questions, great discussion. Um, why don't you lead us out with some final thoughts?
Final thoughts. Listen, guys, I just appreciate you. It's April Fool's Day. I like to joke around. Not giving any jokes today. I think, as I've always said, this is the most blessed time we live in. Ignore the headlines, ignore the news. I can't tell you how much my quality of life improved many decades ago when I stopped listening to the news and listening to all that nonsense. Yeah, I still read the headlines to get an idea of what's going on. I follow up stories when I have to, but I ignore what they say. I dig into the data. I make rational conclusions. I invest in the future, and I think the future is bright. I'd encourage you guys to earn, save, invest. And hey, as always, thanks for being in the audience. Till next time, it's John Pagliano and Joe wishing you the very best returns.